I see some more joining. So let's get started. Assalamu alaikum, everybody. For those of you who are joining us now, thank you so much for spending this time with us and joining us for this webinar. Before we get the presentation started, just wanted to put up the disclaimer out there that this webinar is only for educational purposes. And if you did need any personal recommendation or financial advice, please reach out to us at info@shariaportfolio.com or call us at 1-888 Halal Stocks, and one of our financial advisors will reach out to you for your free consultation call. A little bit about myself. My name is Shafaq Qazi, and I'm an investment advisor representative at Sharia Portfolio. I love working with my clients, many of whom come from different states in US and from different professions, and many are also self-employed. I am located in Austin, Texas, where I live with my husband and my family. The agenda for today's webinar is we will begin with a little bit of overview about Sharia Portfolio, who we are, how we function. And the actual presentation is divided into 4 parts. The first part is about demystifying a little bit about stock market, covering basic definitions. We move on to value investing, which is an investment philosophy. And there are various kinds of investment philosophy like technical analysis, day trading, fundamental analysis. At Sharia Portfolio, we do follow value investing, and we'll be covering a little bit of that. And then we'll move on to Sharia compliance, how to figure out if the company, the stocks are halal or not, how to do the calculations, where to look for Sharia compliance and whatnot. And once we have figured out stock market, investment philosophy, Sharia compliance, the next step obviously will be how to get started. We do intend to have a Q&A session towards the end, so please continue to submit your questions and we'll be happy to address those at the end of the webinar. A little bit about Sharia Portfolio. Sharia Portfolio offers professionally managed investment solutions to help Muslims achieve their life goals while adhering to their Islamic values. Sharia Portfolio USA was founded in 2003 and is licensed by US Securities and Exchange Commission, better known as SEC. We have clients all over United States. We are licensed to serve anywhere in US. We also have presence in Canada and are able to serve internationally as well. We are dedicated to Sharia-compliant halal portfolio management, and we work with the top-tier custodian, TD Ameritrade. And TD Ameritrade is one of the safest and well-known custodians in the United States, and which is typical of any well-known custodian. TD Ameritrade offers FDIC insurance up to $250,000 in your cash, and SEEPS insurance up to $500,000. So all the protections and extra features that TD Ameritrade offers is extended to our clients. We do have different services, 2 services actually. The access service is our premier solution, which is our most popular solution that we offer. And then we have express service, which is our more economical solution for halal investing. And it is for people just starting, fresh graduates, or people starting with smaller amounts. We are able to support almost all kind of account types. So every type of retirement accounts, whether it's traditional IRA, Roth IRA, if you're self-employed, SEP IRA, individual 401k, if you have spare cash, you can open investment accounts. And if you're looking for saving for your children, then we also offer education savings account. And now we will move on to a co-worker of mine, Rizwana Abid. Rizwana Abid is an investment advisor representative at Sharia Portfolio, and she's based in San Francisco Bay Area, where she serves our clients in California and beyond. Rizwana holds a master's degree in public policy from UC Berkeley. So the stage is all yours, Rizwana, but just a quick reminder, please continue to submit your questions as we go about.
Assalamu alaikum, everyone. Thank you, Shafaq, for the kind introduction. And thank you all for joining us here today. We're going to start with some basic market terminologies first, because we think it's really important to have a good understanding of some of the fundamentals of the market to be able to consider investing. So Let's talk with stocks first. Stocks are, they represent part ownership of a business. Whether you own, 5 shares in Apple or 10 shares in Google, you have part ownership in that company. And owning stocks give you voting rights as well. So therefore, the value of the shares is really tied to the performance of the underlying business entity. If the business does well, there's a potential for profit. And if the business does poorly, there's a potential for loss there as well. Bonds are interest-based fixed income securities, and they're essentially debt obligations. And if you're a holder of bonds, you're essentially lending money to either a government or a corporation, and in return, you get paid a fixed rate of interest. Because they're interest-based, bonds are, of course, non-Sharia compliant, and hence we don't utilize them in our portfolios. Sukuks are Sharia compliant investments that are often referred to as Islamic bonds. However, they are somewhat different than bonds, and it's kind of important to understand the distinction. Sukuks are backed by an underlying tangible asset, and it earns a percentage of the assets typically generate a revenue. The sukuk holder is given partial ownership in the asset, and they are able to earn a percentage of the revenue. Therefore, it's more of a partnership or leasing agreement as opposed to a debt obligation that you would see with a bond. And a portfolio is really the totality of all of your investments. So if you own 5 shares in Microsoft, 15 shares in a commodity like gold or silver, 10 shares, in something else, then your portfolio really is the collection of all of these different types of securities that you own. Now let's talk a little bit about the history of the stock market. So if you are somebody who has never invested anything in the stock market and you came across a graph like this, it might create some anxiety and even confirm some of the fears that a lot of people hold about the stock markets being very volatile and how there is a potential to lose all of your money. So this graph essentially shows the performance of the stock market during the financial crisis of 2008, during which time the markets crashed and it went down by about 39%. So if you look at this graph all by itself, it probably confirms all those fears and will aggravate your anxiety about the stock market. But if we were to put this graph in context and look at it from the broader perspective, what we see here on this graph is that the period that we were talking about in 2008 only represents an area in this graph, which is the area in the circle. So overall, if you're looking at the stock market from a broader perspective, it doesn't, over the long term, it looks like stock markets have an upward trajectory. So that period in the 2008 financial crisis, that was just a bump in the road. And the years that followed the financial crisis were some of the strongest bull markets that we experienced. So historically speaking, then stock markets will tend to have an upward trajectory over the long term, and they can help you achieve an annual return of 8 to 10% in the long term. So the takeaway from this really is that, yes, you can experience volatility in the short run, but if you're thinking about investing, you should really be thinking about investing for the long term, which typically should be longer than 3 years. Yeah. Sorry. So now let's talk about some of the reasons to consider investing. So retirement planning is, of course, one of the most important aspects, making sure we're well prepared for retirement, because without proper planning and relying solely on Social Security, we might realize later that Social Security benefits is really not sufficient to sustain us in our retirement age. In most cases, Social Security benefits makes up about 30% of people's income in retirement. Therefore, if you're not planning properly right now, you might be in for a surprise, and it's not necessarily the good kind of surprise. Another important aspect would be education, saving for your children's education. So in this day and age, a four-year college costs, somewhere around 100K for folks who are going to college right now. However, if you have small children and by the time they're ready for college, you might be looking at a cost of 175K just for a state level education. And that's not even considering graduate school or private school. So having some money put away for your children's education might be a good idea. And we offer a few different education savings accounts to address those needs. Now, another thing would be, if you want to donate to a charity, right? There are various investment vehicles such as a donor advice funds or charitable trusts that you can set up to contribute to your favorite charity. And, you would be able to, avoid some of the capital gains taxes if you donate appreciated stocks to your donor advice funds and be able to take some tax savings that way. So lastly, tax savings is another big consideration for saving, for considering investing. If you're not taking advantage of tax deferment benefits that some of your retirement accounts provide, you might find that you're losing 2% or more towards taxes every year. So this graph right here, kind of solidifies the point I made earlier about tax savings. By investing in tax deferred accounts such as a 401k, 403b, traditional IRA, SEP IRA, these kind of accounts will historically help you achieve about 9.75% returns in the stock market over the long term. If, however, you're not taking advantage of the tax deferment benefits that some of these accounts provide by investing, you're losing about 2 to 3% from paying taxes, and your returns drop to 6.9%. And inflation is another thing we obviously have to be mindful about. Keeping too much cash in a bank account might not be the best idea because your money is losing value due to inflation. Of course, it's a good idea to have an emergency fund, but you should also be mindful that excess cash that is sitting at a bank might be losing its purchasing power every year due to inflation. So that's definitely something to think about. Now, this graph right here kind of talks about the life cycle of revenue streams. So if you're young and you're in your active earning years, it's likely that 90% of your revenue or source of income is coming from your primary job. You might have a little bit of money invested in stock market or in other type of investments, and we'll talk about what some of these other investments might be in the next slide. But by and large, your primary job is your main income source. So your revenue stream looks more like the graph on the left. However, over time, as you approach retirement age, you really want your revenue stream to look more like the graph on the right side, so that your primary job is making up about 20% of your income source, but you have grown substantially in your stock market or real estate portfolio by that time, and you're able to easily live off of those incomes. If you do this, essentially you are positioning yourself in such a manner so that your primary job is there as a supplement to your income, and you're working because you want to, not because you have to. So in reality, it's really very important to have multiple revenue streams. You don't want to rely on just one income source, because if something were to happen, may Allah protect us all, and for some reason you're not able to work, then at least you have some other source of income to rely on for your sustenance. So now let's talk about some of these other type of investments. So they could be, real estate. So, from real estate, you could earn rental income, and, you could also have appreciation from your assets. Commodities, such as, investing in precious metals like gold, silver, could be another type of investment. You could also invest in business startups, either for yourself or in partnership with friends or family, whoever it might be. The key point is that it's always a good idea to diversify your assets and consider allocating your money in different types of investments. You don't want to put all your eggs in one basket, and that's why it's of utmost importance to diversify investments. Now, I'm going to hand it back to Sister Shafaq to introduce our next presenter.
Thank you so much, Rizwana. That was pretty, I hope our viewers found the information very useful, especially about the retirement accounts, and how they can serve as really great tax saving vehicles. Anybody in the United States can open a traditional IRA if they're not participating in the 401k that's usually offered by employers. Or if you're self-employed, definitely consider a SEP IRA or an individual 401k. Roth IRAs are also another type of retirement account, and they can save you significantly in taxes as well. So definitely, it's a great idea to consider retirement accounts and which one is suitable to you. And I love the revenue stream slide, Rizwan. I wish somebody had shared that with me when I was a lot younger, so I could, rely less on my primary job and more. But alhamdulillah, it's a great advice for the young people at least. So now that brings us to our next presenter. Of course, before we move on to him, a reminder again, we are getting some great questions. Please continue to submit your questions, and we will address those towards the end, inshallah. Okay. So our next presenter is a coworker of ours, Ali Asghar. Ali Asghar is a regional manager at ShariaPortfolio with an undergrad degree in individualized studies from Metropolitan State University with a focus area in psychological and managerial sciences. He will be presenting the rest of the webinar today, inshallah. Ali Asghar, the stage is all yours.
Assalamu alaikum, everyone. Hope everyone is doing well. Thank you so much for the introduction, Shafaq. I appreciate it. So to kind of piggyback on where Rizwana left us off in terms of talking about the different types of investments. So the first thing that we want to sort of discuss, the thing that we want to address initially is value investing. So essentially, how I want to start this off is by introducing investment as a whole. And the best way to go about doing that is just defining investment. And who better to define it than Benjamin Graham? So Benjamin Graham is considered by a lot of individuals as the father of investment. So I bet a lot of you know who Warren Buffett is. He's in the news all the time, but Warren Buffett attributes a lot of his success to Benjamin Graham. He says that as a mentor that he has helped him significantly in sort of figuring out his investment strategies and that sort of thing. So, and Benjamin Graham defines investment as an operation is one which upon thorough analysis promises safety of principal and satisfactory return. Operations not meeting these requirements are speculative. So what that means is that when you're trying to invest, basically, your goal is that you want to save the money that you've currently invested and produce a return on it, okay? And you want to have a reasonable goal for that, and that's how an investment would be considered appropriate. And if you're not doing that with those sort of guidelines behind it, then it wouldn't be considered an investment overall. So value investing and how we go about doing it at ShariaPortfolio is basically we promote investing from a holistic perspective. So we don't just look at the charts. We don't just look at patterns. So Rizwana earlier was sharing a little bit about the stock market history, right? So an individual who's perhaps a day trader, for example, might look at a chart and say, okay, based on this current trough, I think that it's a good time to buy, and then I will be able to produce a good return off of that. But again, that's speculative, because overall, when you're buying a security, when you're buying a holding in a company, you're buying into the business. You're not buying into just a chart, right? And that's how you want to think about it, is that you want to look at it overall. And so that requires a lot of analysis. So we have to review the holdings for the margin of safety. We have to determine whether there's a realistic and reasonable return available in a specific holding, that sort of thing. So you want to have an overall holistic picture of the holding before you begin investing into it. So for example, what you want to determine is is the stock price justified? Okay. There's a difference between the value of a stock holding in the stock market and the price of the stock itself. So what I mean by that is that the intrinsic value of a stock is not just based on what the price is listed on the ticker, right? So when you're buying a stock and you pick up a holding for, let's say, a certain value, right? So let's say, for example, Shopify right now, right? So if Shopify is listed at, for example, I don't know what the most recent trading number was, but let's say it's listed at $1,200. That value is not an intrinsic value based on the company's holding. Okay, the company's holding, you'd have to do a thorough analysis of different types of features or different numbers of the stock, and that's how you would determine whether the price is a good time to buy or the price is not a good time to buy. So you want to look at different variables such as longevity, who's in the competition with that holding. You want to look at what type of revenue they're generating. You want to look at their growth projections, their EPS, their profits compared to the share value, all that sort of thing. So because overall, a stock is the price listed by the stock on the stock market is based on volume selling, right? And so when you're buying and selling, it increases the stock or decreases the stock. That's just supply and demand. That's not to say that's the intrinsic value of the stock, just kind of like how we just saw recently with like GameStop and such. So basically what you want to look at is you want to be fearful when others are greedy, and you want to be greedy when others are fearful. So when there's a drop in the market, depending on what you've already determined to be the value of a stock, you would be buying in. And when it goes up, when people are scared, when there's a certain drop in the market, then you want to be greedy at that point, right? And so one of the examples that we sort of want to talk about, like that comes to mind, is, for example, a few years ago, Apple, right, was sharing for was listed at about $250 a share. Okay, and everyone uses an iPhone. I know I use an iPhone. I didn't used to, but now I do. And everyone has an Apple. Everyone has an iPad. Everyone has an iPhone, and AirPods. Like they're just a general product that everyone is aware of, right? And so when their stocks were selling for $250, we had clients come forward and say, I want to buy this stock because it's the next big thing, right? And because everyone's so aware of it, everyone's talking about it, and so the price kept going up, right? And after a little bit, the stock dropped to about $80 a share, okay? And when it dropped at that time, that's when we were like, this is like Thanksgiving sale. We need to get into this, and we need to buy in at that time. So that drop from $250 to $80 a share, what did that signify, right? Did the value of the company go down in that time, and that's why the drop had occurred? No, right? The intrinsic value, the value of the company itself did not drop that much. In fact, in that time period, they're increasing, whether it be their manufacturing capability, whether it be other factors such as that. And so that drop is not justified based on the intrinsic value. And so that's when we're deciding to buy in. Okay. And that's sort of one of the things that you want to think about, is that when a stock drops down or when it grows up, that's not always necessarily based on what the value of the stock is supposed to be. Sometimes it's just based on trading volume. So again, we want to be fearful when others are greedy and be greedy when others are fearful. And Warren Buffett is, again, as I was mentioning, a lot of you probably know about him. So the next step of the presentation that we want to sort of discuss a little bit is Sharia compliance, okay? And Sharia compliance, how we will begin is by defining what halal investing means. So halal investing refers to investments that are made which conform to Islamic principles. When these investments adhere to the guidelines of a trustworthy Sharia advisory board, they're considered to be Sharia compliant, okay? And that's how we want to define at the base level. This is how we want to define halal investment. So at ShariaPortfolio, we utilize a Sharia advisory board called AOFI. So AOFI is the accounting and auditing organization for Islamic financial institutions. So, and their mission statement is standardization and harmonization of international Islamic finance practices and financial reporting in accordance to Sharia. So a lot of the names that you might see on the AOFI board are probably individuals that you've heard of before. And they utilize both financial experts as well as Islamic scholars to determine whether specific holdings are Sharia compliant. And basically, they determine their compliance on how I like to refer as 3 basic levels of filtration. So in the first level of filtration, what they're doing is they're looking at whether the stock's income sources are compliant or not. And so at a base level, these are the overall income sources that are not allowed, and companies that are earning their income through any of these sources would not be considered compliant. And so as you can see, gambling, alcohol, pork, weapons, tobacco, these are all like the basic level of filtration that we want to cut out of right at the beginning, because these are not things that we want to be investing into from a Sharia compliance perspective. So the next level that they would then be filtering through is using different guidelines. So for example, stocks, sukuks, as Rizwan was mentioning earlier, mutual funds, Islamic ETFs, which are eligible on the general market as well, are all eligible for Sharia compliance consideration. So at the base level, these are the type of holdings, these are the type of securities that would be considered compliant. And preferred shares, for example, would not be considered compliant. So preferred shares, the reason that they're not compliant, one of the main reasons is that they function very similar to bonds, right? And so bonds being debt instruments, when you're buying a preferred share, the company is basically withholding to you. So not only are you holding a stock for them, but it's a debt consideration for the company as well. And so they're also not considered compliant from a Sharia compliance perspective as well. So that's the second level of filtration. First, where's the income coming from? Second, what type of security are you buying? And then third is different financial ratios. So for example, interest-bearing debt, if a company has interest-bearing debt over the last 12 months, and it's above a 30% limit that is determined by the scholars, then that is considered non-compliant. If, for example, their cash and their cash equivalents and receivables are greater than 30% in terms of above their assets, then that's also considered non-compliant. And then the third is their revenue overall. So, I mean, in this day and age, companies are not only going to be investing into what we might consider to be halal income. So, but there is a cutoff. So if more than 5% of their non-operating interest income is from a non-compliant activity in terms of where their income is coming from, then that holding is also disqualified in terms of halal compliance. So those are the three basic filtration systems, as I like to refer to them, in terms of Sharia compliance. And I think I'm going to hand it back over to Shafak if you're ready for us.
Thank you so much, Ali Asghar. That was pretty insightful. Especially I like how value investing that you explained, how it's easily aligned to our Islamic values. There's a Tirmidhi hadith that tells you to tie your camel and then put your trust in Allah. And it kind of like aligns value investing with our Islamic beliefs. And of course, the Sharia compliance aspect that you explained, it's interesting how sometimes even the revenue or the business of a company can be halal, but there could be a side gig going on in a company, in a halal business company, which could put it outside Sharia compliance guidelines. So we do have to dig in deeper, and AOFE is definitely one of the gold standards in the industry, that we're able to screen our companies and stocks, and how our portfolio management team diligently checks all the investments for our clients to make sure that all the investments are in a Sharia compliant manner, or our clients' hard-earned money is always invested in a Sharia compliant manner at any given time and point. So now that you have learned a little bit about the stock market, investment philosophy, specifically about value investing, how to figure out Sharia compliance of a particular stock or a company, obviously the next step would be to get started. There are few different ways to get started. The first way to get started is you can open, you can self-manage your own account. So you could open a brokerage account through any of those brokerage firms out there, and you can buy and sell your own stocks. Of course, you're going to have to do a lot of research. You'd have to do a lot of analysis to make sure that you're buying the right stock with the right potential. Do a lot of reading of articles and stuff. And once you decide that you like certain stocks, then you have to screen them for Sharia compliance based on the calculations and the overall idea that Ali Asghar shared, right? One relatively easy way to look for Sharia compliance is look at the mutual funds prospectus. So, there are some halal mutual funds out there. You could check their prospectus. They're required to share the prospectus publicly. And if you look at it, there's about 100, 200 stocks in there. You would have to go through, the list of all those stocks and decide which of the stocks align with your goals, align with your, investment idea that you have or goals that you have set for yourself, and then pick through them. If you're able to do all of this, then you are good to go. You're all set to self-manage your own brokerage account. But not everybody is cut out for that. Some people find it very overwhelming to do all of that, to do their own analysis and then decide if it's a good time to buy, how much to buy, figure out the Sharia compliance. Not everybody likes to do that, or some people feel overwhelmed. So in that case, definitely you can choose a financial advisor to assist you to get started. But there are definitely different things that you need to look into a financial advisor. And three of the most important things that you may want to look in a financial advisor is that, number one, of course, if they understand, he or she understands what Sharia compliance is, and if they're able to screen your stocks through Sharia compliance. Second, of course, investment philosophy is a huge part of investment accounts. So you want to make sure that the investment philosophy of that financial advisor is aligned with your goals. And then, of course, the third part is the management fee. You want to make sure that the financial advisor that you're working with is a fee-only financial advisor, and it does not take any additional commission, which could lead to bias or conflict of interest. Just as an FYI, ShariaPortfolio is a flat fee-only financial advisor. We do not take any commission, so we do not have any conflict of interest or bias in terms of that. Of course, the third alternative is to work with ShariaPortfolio financial advisors. You could contact any one of us, or you could go on our website under the teams and see some of the financial advisors listed. Then you can reach out to one of us, and any one of us would be glad to schedule a consultation call with you. We do offer two services specifically to cater to different audiences. Our express service is our economical solution to halal investing. It's more like a self-serve thing. You need $1,000 to get started, and you create your own account, you submit your own questionnaire, and it's also very economical. It has less interaction with the financial advisor, but you do get to work with a licensed professional. Our access service is definitely our more comprehensive wealth management solution that we offer. It does have a higher minimum to get started, and sorry about that. So what Access offers is it offers a personalized financial advisor for yourself, a dedicated client services team who will do all the heavy lifting, filling out the forms, and all the work that's required to set up different accounts. They'll take care of it. It has customized portfolios and a lot more features, a personal account portal that ShariaPortfolio offers, and a lot more features in it. So, you can decide, you can consult with our financial advisor at ShariaPortfolio and decide for yourself which service is more suitable to you, whether it's Express or Access, and which account types are more suitable for you. So that kind of brings us to the end of our webinar today. Here's the contact information of all three of us. Please feel free to reach out to us either by email or calling us, and we'll be happy to connect with you all. Let's see, I do see some questions. Let's see if we can get to them. So one of the questions is, it says, can you have two IRA accounts, one via your employer and the other from your personal business, such as Roth IRA? Do any of you all want to take it, Rizvana or Aliasgar?
Yeah, I can take that. So I believe you could have, so for employers, they, employer-sponsored retirement plans, mostly take the form of 401k, 403b, 457 sometimes. But, IRA accounts are mostly for individuals who don't have an employer-sponsored retirement plan. And so you could have, a traditional IRA, which, you contribute with pre-tax money. And then you could also have a Roth IRA where you're contributing post-tax money. But the caveat there is that for your yearly contribution, to either one of those accounts, right, they combined cannot exceed $6,000 in a year.
Thank you, Rizvana. I hope that answers the question for the brother who submitted it. There's another question. It says, Assalamu alaikum. I live in Washington, D.C. metropolitan area. Is there any of your local agent available for one-on-one? We are fully licensed to serve anywhere in the United States, and our clients are scattered all over US and various states. We currently, obviously, pre-COVID, we used to travel a lot, and we're able to have one-on-one sessions with our clients or prospects in various states. But due to COVID, everything's online now. Feel free to reach out to us, and you can schedule a call with one of the financial advisors over the phone or Zoom, and they'll be available and happy to address your questions and guide you, inshallah. There's another question. It is there a minimum investment amount to get started with you? Aliasgar, would you like to take it?
Sure. So in terms of a minimum investment overall to start with any of our services, normally we recommend that you begin our express service with around $1,000 beginning amount, but that is not a hard limit. Anytime you want to start investing, we can help you figure it out in terms of what services we can provide. For our access service, in terms of getting the premier service, our normal recommendation is that we begin at $100,000 for the portfolio. And the reason for that, a lot of times I get questioned about why that $100,000 limit is there. And it's sort of because, for example, if you have a $25,000 or a $20,000 account, right, and you want to begin investing, if you want to invest in that account and we want to buy individual holdings, for example, Shopify, as I mentioned before, is, let's say, $1,200 a share. In a $20,000 account, if we spend $1,200 on Shopify alone, that's over 5% of your portfolio being invested into one specific holding. That's high risk, and you don't want to go about doing that. So that's why we recommend having a higher starting amount. But that's not to say that we will not work with you if you're not at that point yet.
Thank you, Aliasgar. There's one more question. It says, am I locked with you? And what if I need to withdraw money from my account? I think I can answer that question. No, you're never locked in with ShariaPortfolio. You are always free to close your account, withdraw your money, or transition somewhere else. Our team will happily assist you do that. And if anything, we will refund any of the unused portion of your fee when you close your account. So you're never tied with us. We like to keep our clients happy. And then there's another question that says, what type of education savings account do you offer? Rizwana, would you like to answer that?
Sure, yeah. We offer, so when it comes to education savings accounts, there are really three options. The Coverdell ESA, the Coverdell Education Savings Account. There are the UGMA, UTMA accounts, both of which are Sharia compliant. There's also Section 529 plans, which are, something that are offered by different states, but they are actually not Sharia compliant. And we have a great article on our blog under the media section on our website that discusses the pros and cons of these different education savings plan. And I highly recommend anyone interested to check out that article. And please also feel free to talk to one of us to get more information about education savings account if you're interested.
Thank you, Rizwana. Another question that is, and this is something we frequently get, is, how can we transfer an old 401k from a previous employer? You definitely can do that. Any of your old retirement accounts from your previous employers can be rolled over into an IRA, and ShariaPortfolio team can assist you in the process and manage it for you. And we can make sure that the proper process is followed, so there's no tax implications or penalties involved. A lot of time people have several old retirement accounts that they have actually lost track of. So, it's a good idea to look into it and consolidate your old retirement accounts into one IRA. If, in a way it helps that it's solid, it strengthens your account into a bigger amount size. So there's better diversification to be offered. And there's also a way to do your current 401k that with your current employer that you have for ShariaPortfolio to manage. There's something called self-directed option that is usually available by the employer. If you have that self-directed option available, then ShariaPortfolio team can definitely manage your current 401k with your current employer for you. Couple more questions is, what are your fee structures? Aliasgar, would you like to take that?
Yeah. So our current fee structure, and correct me if I'm wrong, is if you're up to $100,000, we're at 1.5%. From 100 to 500,000, when you hit the $500,000 mark, you go to 1.2%. When you hit the $1 million mark, you're at 1%, and when you hit the $5 million mark, you're at 0.75%. So that's a fee on a yearly basis, if I'm correct?
Almost there. The first part, this is the access fee, 100,000 to 500,000. So if you start, access has 100,000 starting minimum typically. So if you start with 100,000 until you reach 500,000, your fee would be 1.5% per year. And if you start with Express, which is our economical solution that we offer, your fee would be 0.5%. So 0.5% a year on accounts 25,000 and below. So if you start with $1,000, just to give you an idea, the fee to manage $1,000 account would be $5 a year. So, it's pretty economical. And then once you cross 25,000 under Express, then your fee goes up to 0.75% a year. which is because at that point you will start having individual stocks in your portfolio. So $25,000 and more accounts have individual stocks, and that does require a lot more diligence, and it's much more time consuming. So the fee goes to 0.75. So Express is 0.5 to 0.75% annually. And one thing we do is that we deduct the fees first, and then we calculate a performance. So, it's much more of an honest number that we give, and the fee is already factored into it, inshallah. I have one more question, and maybe we can close after that. That is, how do you plan to diversify my money? Rizwana, how about you?
Sure, yeah. I'll try to answer that. So as we mentioned, in investment, it is very important to, be able to diversify your investments. It's like in real estate, you have location, location, location. In investment, you have diversification, diversification, diversification. So we provide diversification for our clients' asset in 3 different levels. The first level of diversification is, of course, through asset allocation. In order to create any sort of customized portfolio for our clients, we would select from an array of Sharia compliant investments. And, they can be individual stocks, ETFs, sukuks, different commodities, any allocation in cash, right? And then, depending on that individual's, risk tolerance, the investment strategy that they want to follow, we would then decide how much of this individual's portfolio should be allocated to this one specific asset class, right? How much in stocks and how much in ETFs, how much in sukuks and whatnot. Then the next level of diversification we provide is through sector allocation. For example, if we were to decide that for one of our clients, 30% of this client's portfolio should be allocated to stocks, next, we have to determine whether we want to allocate all of that 30% into a single sector, or we want to diversify across other sectors as well. So ideally we would want to diversify across other sectors, but it would kind of depend on the individual client's goals, and their risk tolerance and whatnot. And we make that selection and rebalance the portfolio on almost daily basis. Lastly, we provide another level of diversification through our individual stock selection. When trying to select stocks, we obviously try to look at each company very carefully, and we don't invest in hundreds of stocks. For most of our portfolios, we try to pick 15 to 20 positions in any given account. And we really try to take a core thematic focus on some of the areas where we see or feel that there might be opportunities for growth. For example, in the COVID world, we noticed that there was a huge demand for services such as Zoom. And we took a position in that stock, and alhamdulillah, it did really well. So that's kind of like a high level kind of way to understand, how we provide diversification. If you want more information, obviously, feel free to reach out to us, and we will be happy to talk to you about this.
Thank you, Rizwana. I do see one question about SEP IRA. It says a self-employed individual owning a single member LLC is able to contribute a maximum of $58,000 to a SEP as an employer in 2021, which is correct. Can the same individual make a matching contribution to SEP as an employee? If so, how much can he contribute? Well, legally, we're not allowed to give tax advice, so it might be a good idea to confirm this with a tax specialist or a CPA. But yes, as in a SEP, you are allowed to contribute up to $58,000 for 2021, or 25% of your earning, whichever is less. So that part is true, and I believe you're also able to contribute as an employee, but how much you may want to confirm with a tax specialist and or a CPA that you work with.
Actually, just a quick comment on that. In actuality, for a SEP IRA, the employer is the only one who is able to contribute to that. So an employee of a company with the SEP IRA would not be able to contribute to the account.
I see. So another option for them would be to have an individual 401k or a solo 401k, in which case the employer and the employee both are able to contribute instead of having a SEP IRA. Thank you so much, Ali, for that correction. There's a few more questions. So there's one, I'm close to retirement time. I have my IRA, Roth IRA with another company, which is not Sharia compliant. How do I transfer in halal investment? Please reach out to one of our financial advisors, and they will have a one-on-one consultation with you. That this can be very easily done. You can easily bring your IRA and your Roth, both the accounts, to ShariaPortfolio, and we will be able to manage it very easily for you, and our team can assist you with the process, inshallah. I believe we have covered, and yes, those Apple prices that Ali Asghar mentioned earlier, those were pre-split. So that's true. Do you do purification for the stocks to get rid of interest contribution to the profit? Would any one of you all like to take that?
Sorry, can you repeat that?
Do you do purification for the stocks to get rid of interest contribution to the profit?
So we can help in terms of determining a plan for how you can purify your account if you have holdings that were in non-compliant. In terms of continuing that as a service, we would want to be able to take it step by step in terms of initially purifying it and then moving away from that type of holding. So if you want to discuss that a little bit further, it might be better to have an individual session and we can talk through how that would work.
Thank you, Ali Raza. I believe we already covered the minimum investment requirements for each service. I guess, what is a highly leveraged business and why is it haram to invest in? Probably Ali Raza, Ali Asghar, you might want to take that because you covered the Sharia compliance aspect, the financial ratios.
Sure. A highly leveraged business is basically a company that has a lot of debt obligation, essentially. And the reason that you don't want to invest into a company like that is obviously it just makes sense, right? If they have too much in debt, then they may not be able to pay off their current loans. And that's why if their assets are not equivalent enough to be able to take care of those receivables, then you would not want to be investing into that in terms of Sharia compliance.
Thank you, Ali Asghar. There's this question, I can answer that. It says, how much fees do you charge for basic express account up to 100,000, basic express up to $100,000 account? So if you're under express service, of course, the interaction and the assistance is limited compared to access service. But if you have a $100,000 account under express, the fee for it would be 0.75% annually. Where can Muslims find a list of Sharia compliant securities companies? So there's not a list of Sharia compliant securities and companies that is prepared where you can just go and check out all the stocks, simply because Sharia compliance is a very fluid space. So a company could be Sharia compliant today, but there's no guarantee that it will be Sharia compliant even 2 days later or next week or a few months later. So, if for us to have a list, we would constantly have to update it. But there is a Sharia compliance tool, available on our website where you can submit your requests if you're trying to figure out certain stocks if they're Sharia compliant or not, and you can submit your request, and someone will reach out to you and answer those questions for you.
I wanted to address quickly. I'd answered a question about the purification. I was rereading that question again, and in terms of purification for stocks, so the question is worded to get rid of interest contribution to the profit, right? So interest income is generally not compliant, so we would not be calculating how to purify that per se. What we would be calculating is if a holding has non-permissible income, for example, or a holding is part of non-permissible income and has created some sort of revenue, we would then help you calculate the purification amount for that. But if a holding is earning interest, then it's generally not compliant overall.
And we won't buy it.
Correct.
Okay. I believe we have covered most of the questions. I think we are good to go. Any other questions you may have, feel free to reach out to us and schedule a one-on-one consultation with any of our financial advisors, and we'll be happy to assist you moving on. Thank you so much for joining us, and have a great rest of the evening. Thank you, Rizwana, and thank you, Ali Asghar. Assalamu
Thank you.
alaikum.
Like,
Assalamu alaikum.